Hello, and welcome to the Logistics Management Podcast Series. My name's Jeff Berman. I'm Group News Editor for Logistics Management Magazine, as well as the Peerless Media Supply Chain Group. Today, it's a real pleasure to welcome back Tony Hatch to our podcast. Tony is a longtime friend of the magazine, and he serves as principal of ABH Consulting based in New York City. Tony has nearly 3 decades of experience in the freight, railroad, and transportation sectors, primarily as an analyst. In his role at ABH Consulting, Tony focuses on the freight transportation segment, particularly surface transportation, and he is well known for his coverage of the intermodal area where the various modes of freight transport converge, on which he has held several dozen specialized conferences. Prior to the launch of ABH Consulting, Tony was an analyst for Salomon Brothers, and then over at Argus, and then at Payne Weber. And his last stop, an analyst, the Wall Street analyst on Wall Street, that is, was at NatWest Markets prior to starting as independent analyst and consultancy in 1999. Tony also programs the annual, and I might add, excellent Rail Trends Conference, which is held every year in New York City, featuring C-level speakers from Class 1 railroads and short lines, that is, as well as various industry experts, analysts, and association leaders. Hey, Tony, welcome back to our podcast.
Jeff, thanks for having me.
Yeah, absolutely. It's great. It is great to have you back. And the timing to have you back, Tony, is quite good. Just given everything that's been going on in the freight transportation and logistics circles. But why don't we start with sort of the rail carload market / intermodal too, Tony, just in terms of sort of current market conditions, how things are on the macroeconomic front per se are impacting things when we look at sort of the slowing of consumer demand, sort of a downturn in manufacturing output, and all that loose talk of, are we in a recession? Are we not in a recession? Has a freight recession already happened? There's a lot to chew on there, but why don't we just sort of use that as a jumping off point?
Well, the railroads certainly have no better news than you're hearing from other sectors. It's really interesting. A lot of the macro stuff that I read from reputable business publications, for example, and reputable economists say that, the U.S. economy has been remarkably resilient and, has continued to grow and dodged a bullet and all that. When you get down to the freight numbers, and I'm talking about numbers beyond the companies that I follow, that I monitor, everybody's numbers have been pretty weak, and the railroad volumes have been pretty bad. The earnings beat expectations, but those expectations were pretty low. Not all of them did. The Canadians had, great, year-over-year comparisons and never really had the same kind of service issues to recover from. But, if you're looking at it from the rail perspective and what the railroads are saying, as well as having been at a ton of shipper conferences over the past 6 weeks at, all the regional ones there were, I can tell you there's a definite sense, and I'm really sick of the phrase already, that we're in a freight recession.
Right.
The intermodal marketing companies are saying that. The parcel companies are saying that. Everybody's sort of disappointing on the revenue side. And from the rail perspective, while, I tend to try to look at this from a long-term perspective, but, it's clear, it's clear that there's a trend here. March was worse than the quarter. So far, April hasn't been bailing them out. So in other words, it's not like in the past, they started off with a, really a typical first quarter could have been a really tough beginning because of bad weather, but actually they had good weather. So January was the best month of the quarter, and then it went downhill. So that's not a great trend to, placing us where we are now at the end of April.
No, yeah, I absolutely. And as we're talking, we're also amid first quarter earnings reporting. A lot of companies have issued, a lot more have yet to report. When you sort of read the tea leaves, and I know you're listening in on all these calls from the class ones, obviously, Tony.
Sure.
What are you picking up in terms of sort of, say, key trends and themes that are coming out of these earnings calls and in the data, obviously, as well? I know you alluded to some key things just a moment ago, but more specifically from these calls, what are we hearing?
So I'm in the process right now, as we're doing this call, of trying to figure that out. I try to report, back on my thinking about the earnings a few days later, I don't have the same pressure as others do to update their model instantaneously.
Yeah.
The models were not, we're not that we do, the volumes weren't that great. Cost cutting was, efficient, but not perfect. And in some ways that's a good thing. They didn't, meaning they're not using furlough to try to, really crush recession quarter numbers, and who cares in the long run. But, here's what I'm picking up out of this. I mean, really, first of all, I'm going to preface this. In the first quarter earnings calls, which are much more important than the actual earnings numbers, right? We've gotten traffic on a weekly basis. There are 3 railroads, out of the 5 that are reporting, with Kansas City Southern now, in the midst of history, and
Yes.
BNSF still to report within the context of Berkshire. 3 of these guys that really didn't have anything to say whatsoever. And surprisingly, those 3 included CPKC. You think they have the most? Yes, they did. Take congratulations on the successful conclusion of their merger, but they and their compatriot up north, Canadian National, both have investor meetings. Canadian Nationals, as we're doing this, Jeff, is next week. Canadian Pacific's is at the end of June, and basically held off any kind of long-term or intermediate-term viewpoints for that point. Union Pacific is the other I'd put in the category of not really that exciting a webcast or a meeting, because they're about to have a process of a new leader. So
Yes.
they also didn't say very much. I will say one thing that was really interesting. The only one railroad has actually said that they think that we are in or entering, more likely in, a recession, not just a freight recession. And that railroad was Canadian National. And they were also the only railroad to increase their year-over-year guidance.
Okay.
Whereas the others have basically maintained it.
Okay. Yeah. I mean,
one last trend, Jeff.
yeah, of course.
All of them, so the volumes, they're not looking, they have the same crystal ball as all of us. And many of them, I'm going to follow the pattern that was said by J.B. Hunt, where they don't necessarily trust their own customers. And what I mean by that is not as dark as it sounds, but, that they had been told by their customers, who in many cases will be the beneficial end customer for railroads in the intermodal space, that they expected a second half turnaround. And Hunt is saying they no longer really believe that's going to happen. So the sense is we need to get through this inventory correction. It might take, all of the third quarter even to do that.
Yeah.
But these stories are much longer term. The one trend that out there has been positive, it's anecdotal, but it's really positive, is that all of the railroads reported to varying degrees that they were able to match, the surge of rail inflation, which, as all, we're in an inflationary environment, with pricing. So that even as their service is not fully returned, it is returning, but it is not there yet. They're able to get enough blended overall price to match the increased costs they face, starting with, the retroactive and current raises to labor.
Okay.
So that was a positive thing from the investment community standpoint.
Yeah, absolutely. And I wanted to and obviously I'm sure this was covered in a lot of earnings calls as well. Just sort of the current state of service, a service update. How are things looking when we look at dwell times and some of the other key metrics, train speed, stuff like that.
So they all appear to be getting better, and with the exception really of Norfolk Southern, which has some specific reasons related to East Palestine and taking
Right.
capacity and whatnot. They appear to be getting better. They appear to have been, one of the key things we've been watching is the number of crews that graduated, and be put in the field. They are not through with pocket pieces of crew shortages. In a network business, shortages in one specific area are hard to cover. It's not like you have move people around that easily. They're specifically regionally trained, as you know. So that can back things up even in areas where there are enough crew capacity. The reduction in demand has helped with some of this, for sure. And you have, in addition, the aspect of how experienced these crews are. One of the railroads actually said for the first time that it's CSX in this case, that that some of the reasons that their incidents were up slightly. And by the way, their road accidents are still down. They were even down at Norfolk Southern in the quarter. So I'm not really talking about major safety, but the fact is the crews are inexperienced. They're not as efficient as at switching and whatnot. And that it's going to take a while for the actual replacement of numbers to show up, as better service. And then the next question we had is, when is the better service going to show up in better volume. And the problem is, as I had sort of suspected, maybe when we talked on this last time, will the railroads get their service act together just in time for a freight recession? And that appears to be sort of what's happening.
Yeah.
And, as Meatloaf sang, right, all revved up and no place to go. So that's sort of what I wonder here. It's like, are they going to be, ready for all of this just in time for nothing? So there is definitely business that the railroads lost because they could not handle it for service reasons.
Yeah.
That business is going to come back. But if that customer, let's call it a paper customer, scrap or steel, if that customer's business is down 10%, will we be able to see it in the overall rail numbers that they are gaining share back? It's going to be hard to know on a weekly basis.
Okay, got it. Interesting. And you had just alluded to CPKCS before. Obviously, that's been a huge topic within freight railroad and intermodal circles, really for quite some time. I believe going back to, maybe it was early 2021 when the talk started up.
I believe that's right.
Yeah, so now it's real. Here they are. They just had their first I guess it was the last CP database earnings call not long ago, but now they're their own company going forward. They do remain the smallest of the class ones, obviously, but they're in it, and they're in it to be competitive and successful. I guess my real question in regards to CPKCS is, what now? And how does the market view them? What's in it for shippers? And I just asked that because if I'm not mistaken, they are a true Canada to Mexico via the United States end-to-end railroad now. And that's not something that the other class ones can say, right?
That is correct. They and in fact, when some people tried to ask some short-term questions, they gave them it was really funny to hear when people ask about current operating ratio. Well, who cares, given that this company is about to radically change? April 14th was the last spike, the day referencing the original CP transcontinental link. Now it's the link north-south to tricontinental, and it is the only railroad that does that. We've seen in the last week or so a flurry of emails from really two sides, right? Two new customers, intermodal customers, coming on board the CPKC, and that is Schneider and Knight Swift.
Yes,
it's really interesting. Schneider is a big player in Mexico. Knight Swift isn't, but they're a big player, right? What's really interesting about that is those are the same two companies that Union Pacific, the rival here north-south with CPKC, Union Pacific had taken those two IMC truckers from BNSF to much fanfare. And now these same guys in a different lane have abandoned Union Pacific to go to CPKC.
Yeah.
It's really endlessly fascinating. In response, in the middle of all this flurry of press releases, Union Pacific, along with Canadian National, which actually issued the press release, and FXE, Ferromex, the other Mexican railroad, the slightly bigger one, announced a 3 railroad service that essentially goes in parallel down into the same end markets of San Luis Potosí, Monterrey, and Mexico City. It's going to be a really fascinating, for me, intellectual challenge to see how much does single line service mean on the intermodal sphere. We know that single line service offers huge advantages, less handling, right? Less complexity and all that, easier to schedule one guy than 3 guys, et cetera. But usually with intermodal, that's not the case. Those unit trains get priority and are scheduled in many ways as if they were a single line. I think that UPS, for example, and JB Hunt moving from California to the East Coast using the BNSF and Norfolk Southern don't feel there's a big delay. That train basically runs through. And so that's going to be, they both challenge and say that they're going to be the fastest route. It's going to be really interesting. The only railroad in the picture that hasn't said anything is BNSF, which I think is quite happy to sit there with its IMC partner, JB Hunt, the largest non-auto intermodal company in Mexico, and one that's been there for decades. So, you really now have 3 players competing for that business. And if the gateway stays as truly open as they promised, Laredo is still going to be an area for both UP and also especially BNSF to access Mexico on the CPKC, while at the same time they're competing with them in another lane.
Yeah, no, that is going to be really interesting to follow. be interesting to see where the dust settles when we have a few quarters worth.
At the end of June, they're going to have a 2-day investor meeting where they're going to essentially update the thousands of pages of their application. I think they'll talk a lot more about the trucks off the highway. They really spent a lot of time in their application talking about rail-to-rail competition
Okay.
because they knew the STB was concerned about that. I think that they're not going to in any way diminish that. That's what their new services are designed to do. But they're also going to talk about the fact that while intermodal to Mexico has grown by leaps and bounds, the share has not. And so,
Yeah.
that's an opportunity.
Okay, great. So let's stick with the intermodal theme for a moment, just from a more performance perspective. And by performance, I mean just some of the data you see, for example, from the AAR and IANA. And the IANA data, the most recent batch, actually their Q1 report came out today. And without looking at it, but I did take a quick look at the data earlier in the day. It's down, it's kind of uniform. It's uniformly down. In fact, when we look at domestic containers, we look at trailers, we look at ISO containers, and then / all domestic equipment. It's kind of tough sledding numbers wise. And in that sense, it certainly matches up with your assessment of Q1 and especially the month of March, how it was particularly down. What is the story as it relates to specifically the intermodal volumes? I noted consumer demand probably has something to do with that, as does the inventory outlook. But I'd like to hear about that from you.
All right. It's of course hard to say. You've got excess inventory. That's what everybody's saying. You had both a chastened consumer potentially. We'll see an economic slowdown and the fear of that, combined with everybody being saturated in their purchases and simplistically shifting from buying Pelotons like they did in 2020 when you couldn't go outside, to buying Disney vacations now and that kind of thing. And that's sort of been, there's truth to that movement, and there's truth to reduced, a not as hot consumer, and there is truth to much higher than normal inventories. In addition, there's the specific case of significant share loss out of LA Long Beach, which is bad for the whole rail intermodal ecosphere.
Yes.
Part of that is it's going to be hard to actually separate what is inventory, what is demand decline, and what is movement around the ILWU negotiations, which may be, as we're talking, Jeff, getting a little bit better, but still haven't concluded, and have really made a lot of people reluctant to rely on that port. And so share has shifted to the east. It had been shifting anyway. It had been shifting with more business out of other parts of Asia than just China. It had been shifting as those ports developed, the Panama Canal got wider and the ports got deeper. But I believe there's an artificial share shift there, some of which could go back when they get a resolution of the labor deal. Okay. And that hurts railroad volumes. Right? Obviously, East Coast inbound ships, are much closer to end markets, making it very truck competitive. Right. And as just one of the issues here, Eastern railroads have developed all sorts of services out of this, but from the ports, but they would still, in their heart of hearts, much rather get this business in Chicago.
Yeah, absolutely. And you had just mentioned that West Coast port labor deal. I mean, gosh, they're going on nearly a year at this point.
Correct.
Without a deal, without a new deal. So that is definitely I'm sure, and as you said, things are getting a little better, but I think people really need to see a real deal happen very soon.
Apparently, they've been pretty good about keeping this out of the press. Occasionally there have been some slowdowns and whatnot that the steamship lines and the ports have complained about and the shippers have complained about. But they apparently, resolved healthcare, which is always a contentious one, and may have resolved the use of technology in ways we don't know. That was really would have been a big sticking point, leaving, really the amount of wages, which is, from the future is less important than the amount of technology employed. So hopefully with 2 out of 3 things done, we can, now move to a conclusion. That's my hope.
Yeah, absolutely. And, I did want to mention or talk about just the whole railroad safety conversation, if you will. Obviously, back in February, as everyone well knows, it was front page news for many days, if not weeks. The Norfolk Southern crash in East Palestine, Ohio. When we look back now, Tony, what would you say are sort of the long-term implications of that, and for railroad safety in the sector in general, from both, say, a legislative and as well as also a regulatory perspective?
Well, it's a good question, and I know you wanted me to be brief on this because we could take up all the time. Uh, the railroads have gone through, 3 body blows, not all of which was their fault. The first was supply chain crisis. Everybody was worried about that. We know the ports backed up in LA Long Beach, 100 ships looking like D-Day, warehouse shortages, chassis shortages. But the railroads had a regulatory body that only looks at them, the STB. So they were called in several times to talk about why they were not serving their customer better. And, fair enough, they didn't have enough crews. Then they had the labor dispute, which was a regularly scheduled labor round, but that made the front pages last fall and winter in the fourth quarter. And that made them look like, okay, they were, inefficient, poor managers, and greedy people who had buybacks instead of paying
Yeah.
their labor. And then finally you had an accident. So now they're unsafe, greedy, and inept. I don't think all those things are true, or any of them. The railroads in this case, that was an accident which has already pretty much clearly been shown not to be crew's fault, track fault. It was a very hard to determine car issue, and the voluntarily placed hot box detectors did their job. If they had more, maybe they would have caught it in time.
Yeah.
I won't go into all those details in the horrendous way that politicians of both parties have seen this as an opportunity to get on television. The biggest impact from a shipper and from your readers, et cetera, point of view will be how much of this gets legislated versus regulated. If you legislate 2-man crews, that's really hard to reverse. 2-man crews had nothing to do with this accident. Train length had nothing to do with this accident.
Yeah.
PTP brakes don't particularly work better than the ones. So there's all the things they've been talking about. Car type. I mean, it had nothing to do with this, but they feel they have to do something. If the railroads can hold off on the legislative change and Vance from one side of the, from one party and Brown from the other party, and their bill is really egregious, it's ridiculous. It's entirely for, talking points and television shots.
Yes.
Those people deserve a special place in, legislative hell for that. All that being said, we have to wait and see. The railroads game is going to be try to wait for the NTSB report, try to be fact-based, try to fix what can be fixed. The railroads have no interest in derailments. It costs them a lot of money, and their big fight in the future is going to be based on resiliency and consistency, and falling off the tracks is the opposite of both. The other thing I worry about, Jeff, and I'll just close with that, and I know you didn't want me to go on too long, is that this will delay for some time the railroad's ability to use existing technology in the field for better in automation, automated track inspection, automated car inspection. Those two things work in Canada right now, and they're better than the human eye. And it will certainly delay. We've already seen it delayed in the railroads pushing back from trying to get pilot projects to have a conductor on the ground and a single person in the cab.
Okay.
Keep in mind that only one person in the cab applies the brakes, right? And runs the train. And with PTC and other things, even their job is being assisted in a great degree. So the fact is, what I worry about is all of this is slowing the railroads down as they try to really use technology. At the same time, the same Department of Transportation is helping to subsidize autonomous trucking, which may be a decade or decades in the future, but nonetheless, that's all systems go. But from a rail perspective, it's yellow light, yellow light, yellow light, and this accident and what it's done to rail's reputation, following up on the other 2 body blows, is a problem. The rails need to get out and stay out of the front pages. The best thing that can happen to them is CPKC, as much as they may in Omaha, not like me saying this. If they do their job well, and this is a growth-oriented merger that can help restore railroads to the position they were in a decade ago, really as, environmental saviors, as, tax-paying, logistical suppliers of capacity when highways are jammed and things like that. They need to get back to that.
Absolutely. Yeah. No, great point. Just one or two more quick ones before we wrap up here, Tony. Looking at the whole capital expenditures or CapEx outlook for the freight rail sector, I know at your Rail Trends conference, when you have the CEOs come up and speak, some of them are forthcoming, some are less than forthcoming when it comes to their CapEx plans. But we all know that freight rail, they invest far more into their annual CapEx than the average manufacturer would, by a lot. I think, if I'm not mistaken, you told me on average, the class ones, something like, was it 17 or 18%?
Yes.
As opposed to other manufacturers, which hover more closer to 3 to 5%, I believe, or something like that. So how do you view sort of the current state of CapEx here at the end of Q1 2023? What was learned from those earnings calls, for example? And how does the current rate of CapEx spending match up with past levels in previous years?
So typically under PSR, which has become, unfortunately, and shouldn't be a bad word, and typically under PSR, you see a CapEx reduction for a couple of years, partially because if you use your assets more, you need fewer of them. That's often in rolling stock. If you notice all through, if you follow the trend on spending on the network, that spending has held steady all through this period. The American Society of Civil Engineers, in fact, gave the freight railroads, a B+ rating on their most recent every 3 or 4 year infrastructure report card at the end of last year. They gave highways a D by way of comparison.
Yeah.
So I often hear in this political debate over East Palestine and whatnot, and also over labor, railroads are buying back stock. They're not spending enough on the system or their employees. And I would argue, if they're not spending enough on the system, why are the only infrastructure component that has a good grade in the ASCE report card? They clearly are. They know that the network, the track, and their terminals, that's what a railroad really is. We love to see locomotives painted with the logo, but it's really the iron in the ground. So I think their spending has been more than adequate. It's going to be up this year. Maybe, we'll see if it's up enough to compensate, whether it'll end up being flattish because inflation, cost of steel and whatnot is going to may take away some of that true growth. But you will definitely see spending for opportunistic growth things. CPKC will be one of the leaders of that as they expand capacity, but they're not the only ones. Look at the plan. I mean, really, you'd point to Barstow, California, and the BNSF. I mean, that is a phenomenal $1.5 billion intermodal facility they're building, really as a way to to help build a deeper moat around LA Long Beach. If there's congestion at the port, they can get it out there, rebuild those trains, transload those boxes and move it. So I am excited. I try to keep the railroads feet to the fire. There are short-term investors who like to see all the money go in buybacks. I think the railroads have the right to have a balanced capital plan, which includes rewarding their shareholders with dividends and buybacks, as long as it doesn't come at the expense of trying to grow and maintaining a safe network. And there's ample evidence that it has not come at that expense.
Yeah, no, I absolutely well put. Well, Tony, this brings us to the end of our allotted time for today's podcast, but I did have one more quick question, just on more of a personal note. For those that don't know you, it's worth noting that you do a lot of speaking at different industry conferences, trade shows, etc. What do you have coming up? What are you going to be hitting? And why don't you I'll give you a moment also to promote this year's Rail Trends coming up in November prior to Thanksgiving. If you want to tell us a little bit about that, when it is, but what's coming up, and then hit on Rail Trends for a minute.
So, I follow publicly traded and privately owned companies in the freight, rail, and intermodal space. I spend a lot of time doing that. I travel to see that. For example, I will be at both the Canadian National and the separately Canadian Pacific Investor Days. I expect soon we might have an announcement that CSX will, when Joe Henricks has enough time under his belt. The upcoming conferences that I go to that I really don't miss include the North American Association of Rail Shippers, or NARS, towards the end of May in Chicago, which will get high sea level, as they call it, participation by the railroads. I'll be speaking, and I go to speak at these conferences, regional shipper conferences, labor groups, suppliers, ARIMA. I'll be at Railway Interchange in the fall, which is all of the, back office, ARIMA, RSSI, RSI, the rail car people, and REMSA, all in one big, show. I'm putting air quotes, conference and convention. I go speak at these things, sure it strokes my ego, but I do it because I get to go to them and refresh my Rolodex and see new products, hear what shippers are saying about rail service.
Yeah.
Hear what railroad CEOs are promising to the shippers, and where that may or may not differ from what they're saying in their official earnings calls to the investment community. So I'll be in the next, looking forward. The summer is obviously a slow point. All the kids are out of school. I've got NARS in May and CP in May. And then I go all the way into the fall, where I have IANA's Intermodal Expo, which is always a must-do date in Long Beach with all the intermodal stakeholders, followed by Railway Interchange, which is all the operational cars, switch and signaling, network, bridges, track, all those folks. And then I go into Rail Trends. That's the 16th and 17th of November. It's always the Thursday before Thanksgiving.
Right.
And we don't know who we're going to have yet. It's early. We always have high CEO, our rule there is different from what typical equity conference. We try as hard as we can to have a no CFO rule. If you can imagine a CFO with that line through them. The reason is not that they're not important people in the process. Of course they are, but they're the ones who hone the message that the railroads want to give. And I don't want a message conference. I want an eclectic conference where you learn something from the people who actually do things like, market the product, or design the product, or run the product, or use the product. So railtrends.com, you can see who we've had in the past. I truly believe it's the most interesting, collective overall one, and it's a small enough size. In fact, let me advertise that. And Jeff, you're always there. That makes it especially fun.
Yeah. I think I've been to every one, or I think I've missed one going back to 2007. So it's definitely,
right.
definitely worth the time and the travel commitment, to say the least. And also, I forgot to mention for our audience, please go ahead and check out Tony's website. It's abhatchconsulting.com. Lots of good information and detail there. And also on the logistics management self-promotional side, please go ahead and give us a follow on Twitter if you're not already, simply at logisticsmgmt. And please go ahead and subscribe to our podcast wherever you get your podcasts. Just go ahead and look for Supply Chain 24/7, and we'll pop right up. Tony, thanks again for joining us today. This was great.
Oh, Jeff, I appreciate it very, very much. I enjoyed talking to you. Thanks so much.
Absolutely. And lastly, and this is not germane to our audience, but let's hope for New York Rangers win tomorrow.
Absolutely.
Yeah.
Tomorrow and Monday.
Yes, exactly. All right, everyone. Well, that's it. Have a good one. Thanks a lot, and we'll catch you next time. Have a great day.